Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. What a crazy weekend. Okay, let's just call it like a crazy week and a half of interesting developments on the political scene. Of course, that's going to move the markets. We had the assassination attempt last weekend, and of course we have Biden dropping out. What we're going to do today is we're going to talk about that and show you at least where people are putting their money where their mouth is, right? As far as betting on who the next president's going to be, and we'll let you decide. So that'll be our first topic: is what's happening with the elections, and of course how it's moving the markets. The second topic, and I can't even believe this is second because normally it'd be the first topic, is I have now changed my personal projection on the rate hikes from the Fed this year based on some things that we'll get to a little bit later. But I'm now calling for 2 rate hikes at the end of 2024. Again, that's calling us off of, or excuse me, rate cuts. Thank you. That's different from what we had called as no rate cuts at the beginning of the year. So we've been long and strong in the portfolios. We've been changing that to go to safety a little bit. And again, of course, now we're going to look at that yet once again for the end of the year. So that'll be our second topic, is the rate cut forecast. And then the third topic is going to be, why are we anticipating a couple of rate cuts? Is because the economy is slowing. There's a couple indicators out there, and Mike's going to unlock just a couple of them that are, again, used by a ton of people. So that's what Mike will do for us and kind of explain that really the economy is slowing, and I have to agree wholeheartedly that things are slowing. So that's what we have for you today. Some pretty cool topics. Before we get started, though, it's a financial education presentation. You have to do your own due diligence for acting upon anything you hear in the show, and the opinions expressed are Mike and mine alone. Let's talk about the markets and what's going on today. Have the Dow about even. We have the S&P up and the NASDAQ up. Things were up a little bit earlier. So what's going on in the election? Of course, coming out of last weekend, we had obviously the assassination attempt. The markets kind of on Monday and Tuesday celebrated, not the attempt, but celebrated that brought a lot more certainty to the election with, it seemed like Trump, it increased his odds for winning. And then, of course, now you have Biden stepping aside this weekend, and Kamala Harris being put forth, at least by Biden. Not everybody has endorsed her, and I know if you're a political junkie, you're way ahead of me on, right? All you've been doing is staring at either CNN or Fox News, depending on your persuasion. So you know where that stands. But anyhow, she's now the front runner for the Democratic Party. So what does that do for the markets? Well, I think that again brings the uncertainty back, right? Can she be a strong enough candidate to really challenge Trump here? If so, that brings the volatility back to the markets. If not, then the markets probably will resume their march higher. But what I promised you was this chart. So thanks to Mike for bringing this to my attention. I generally don't like these charts just because of when you see the names of the people that run them, they're both right-leaning kind of talking heads, especially Stossel. So, supposedly they're just reporting the facts here, but the facts can be reported however you want, it seems. But you do see, if you look across, to orient you to this chart a little bit, we're looking 21 to halfway through 24. So really the whole, term of Biden's last, or Biden's current term, I should say, and last term, right? But yeah, it's kind of interesting. So you have Trump kind of here in orange coming out of the last election after just losing, pretty low. There was a point here back in August of 2021, the blue line, so that's Biden up in there. So then that's the purple line.
The purple line is Harris. The blue line is Biden to win the presidency again.
There you go. So I'm sorry, back here we had the purple line. Thank you for orienting there. But right away it was kind of Harris, right? Thinking, okay, Biden's either not going to run or whatever. She was the favorite early in 2021. Thanks for Mike. And then Biden made a comeback, and then here comes Trump. You do see DeSantis making a move here in the middle of that, early 2023. But really all you really care about is, again, this surge here by Trump at the end of this year. Part of that was happening anyway. And of course, the assassination attempt took that a little bit higher. And then you really see Biden kind of falling here. And then you have the purple of Harris kind of coming back up. So that's where we are now. I thought it was interesting, the 3.9% for Michelle Obama. That was one of the names being thrown around this weekend. And then you have several others that kind of don't really stand a large chance, if you will, at least according to what people are betting on. But I think it'll be interesting. I think from just my opinion, I think these odds are probably about right. 2/3 Trump and 1/3 Harris. If she gets the nomination, there's a lot of things they have to work through. I do think this would go immediately to even if there was a situation, and again, JD Vance called for this, and I don't know, hopefully his handlers said, get off Twitter, saying Biden's not competent to run for office. He's not competent in serving in office. And, obviously this would be a big deal, but if Biden stepped aside and made Kamala president now, and then she's running as a sitting president, who's now in her first, adopted term. I think Ford did that after the assassination of Nixon. Wow, that tightens things up significantly if they do that. But I don't know. That would be my genius Democratic move, is make her the president now and then go from there. But yeah, more to unfold. Obviously, there's got to be vice presidents named, and she has to, of course, the convention's not for a couple of weeks yet. So really the markets will probably just kind of flop around a little bit until the convention. We'll see what actually unfolds there. So that's topic one. Second topic is the slowing economy, but in the terms of the Fed. So here's that famous dot plot stuff. Mike usually talks about this, but I kind of stole this from him. So again, orient you. The first set of dots is 2024, then the next is 25, 26, and then the long run. But really right now, if you look in that upper left-hand area, of the governors, there's 4 that are saying no rate cuts this year. Then the remaining group is split between 1 or 2 cuts. I went from 0 cuts at the beginning of the year. We benefited from thinking that, but now I'm going to have to switch. There's just too many indicators out there for me. So I think we will see 2 rate cuts. There's 4 meetings left. I think it'll be the November and the December meeting. The November meeting happens right after the election. Not that they're influenced by that, but I think the Fed probably just wants to stay out of the news cycle until the election goes by, and then does 2 consecutive rate cuts going into next year. So again, that's what you're going to hear me say. What does that mean for positioning the portfolios? Well, puts us in a tough spot because you have the kind of a headwind of the volatility of the election, but also kind of a tailwind of potential rate cuts coming. So tough to tell for the overall market what's going to win out there. But I do think with potential rate cuts coming, things like real estate and your whole bond fixed income portfolio is obviously going to gain in value. Things that were hurt in 2022, I think, will start to come back, not screaming back, but just kind of start to melt back up, if you will, and that'll be healthy for that portion of your portfolio. So that's what I've got for you today. But Mike, over to you to tell us what's going on and what indicators you see for a slowing economy out there.
Yeah, and I'll start by just saying that our economy is generally driven by the consumer. I mean, a lot of times people start to think the government drives it or government spending, and that is a piece of it. But overall, consumer spending is 60 to 70% of what drives this economy. So if the consumer's doing good, spending money, the economy's doing good, and vice versa. So what I try to look at is a couple indicators to keep my finger on the pulse of what would indicate consumer spending. And what do general consumers all spend money on? Cell phones, right? Cell phones. And obviously we're big holders and endorsers of Apple, but what I want to show is what Verizon is doing. So Verizon and AT&T are the big 2, and when I see something like this that just came out, Verizon misses quarterly revenue estimates on slow phone upgrades. Now, of course, the latest Apple phone isn't out this fall or till this fall. And but when we see this kind of thing, I say, wow, Verizon, I don't know, 30, 40% of the phone market, AT&T is the other 30 or 40%. When you see this, I say, wow, consumers are not spending as much, because if all of those, all of my kids aren't upgrading their phones right away, or if other people aren't, I know people are pulling back on their spending. And what I looked at is this revenue number. that I've highlighted where Verizon had revenue of 32.8 billion. That shows you just how much we're spending on some phones. But it was below what they thought of 33.06. Not a big drop, but certainly a drop, and a drop enough to take a stock that is basically a dividend stock that doesn't really move much. And I'm showing here a year-to-date graph. It does not move much, but it pays off a 6.8% dividend. It just dropped it by 6%. So if you bought this stock last Friday to count on that 6% dividend, you just broke even on the year because you just paid it right back. Now we don't have Verizon as in our models, or it's not a major. It's probably held within some ETFs, but this is just an indication. Now the other indicator I'll use is what do a lot of, I'll just say, low middle class people spend money on? Eating out. And although this is not the healthiest food, this is probably what drives Eli Lilly to do so good. McDonald's, how's McDonald's doing? And overall, what I'm showing right here is a year-to-date graph of McDonald's. So guess what? If you put money into McDonald's at the beginning of the year, you're down a good, 10%. When the overall stock market's up 15, 20%. So we're seeing a slowing pace there. And I found this article that came out today, and this may excite somebody, maybe, but McDonald's to extend their $5 value meal. And as I read into this, what you're going to see is McDonald's is doing it. And then, of course, if McDonald's is doing it, then Burger King and Taco Bell and, Wendy's, they all need to do it too. And it even says even Starbucks. And I looked at Starbucks like a month ago, seeing the same thing, missing revenue, slowing, not as good stock performance. And when I think of our economy, I think cell phones, coffee, fast food. These are what how you can see what the consumer's doing, So all indications the market or the overall economy is slowing. I've talked to some friends that are small business owners. They're saying the same thing. I mean, that's just one-off discussions I have. So with the economy slowing, what will the Fed do? They'll start to consider lowering the discount rate, like Steve talked about, to get the economy moving forward. Right now, it's a restrictive policy. That means that discount rate is up higher, so it's slowing the economy. At some point, they'll move it to more of a neutral thing, and that's what Steve is updating our forecast based on. So with that, you can see what your experience is out there, but these are some of the things we keep our fingers on the pulse of the consumer with.
Yeah, I totally agree with you, Mike. I think all consumers are a little bit different, right? But every time we go out to eat or we swing through one of these places, it's just like, holy cow, when did this happen? We're in a position where we're very blessed so we can, just incur the extra cost, but we're well aware that others aren't. So again, it's the masses that really do drive things. So I thought that's very insightful today. So that's all I've got for you today. We'll be back with you tomorrow with some new topics. And until then, take care.